Hello and welcome to AI Market News by LM. Today, we're breaking down a fascinating day in the global markets, one where record highs on the surface were hiding some pretty serious cracks, especially in the world of AI. So, here's what we're going to cover. We'll start with a snapshot of the global market. Then we'll dive deep into tech's pretty wild ride. After that, we'll look at the policy and global headwinds pushing things around. And finally, we'll see what we need to be watching next.
All right, let's kick things off with the big picture, the global market snapshot.
The main headline, the thing everyone was talking about, was the strength in the broader US markets. The S&P 500, for example, actually managed to tick up and close at a brand new all-time high. Now, the S&P 500 hitting a new record is great, but that's not the whole story. As we can see here, things are a little more complicated. While value stocks in the Russell 2000 had a really strong day, the tech-heavy NASDAQ was actually weaker, which is pretty interesting. And this points to a really big theme we're seeing right now, a rotation. It looks like investors are shifting away from those super popular, high-flying tech stocks and putting money into more value-focused companies. A lot of people see this as a sign of a much healthier, broader market rally. So that shift away from tech brings us right to our next section, where we saw that even amazing forecasts weren't nearly enough to satisfy investors who were frankly priced for perfection. Yeah, in the AI space, there's this growing sense that the bar for success has been set incredibly high. I mean, after the massive run-up in these stocks this year, the market is demanding nothing less than flawless execution and a crystal clear path to making money.
And we saw this play out perfectly with earnings from two tech giants, Broadcom and Oracle. Both companies reported really strong demand related to AI, but both saw their stocks get punished for it. It seems investors are now looking past the hype and are getting focused on the high costs and, the uncertain timelines for these huge AI investments to actually pay off.
Let's zoom in on Broadcom for a second. As you can see, their results looked great. They upgraded their AI revenue forecast to over $11 billion and have a massive $73 billion backlog. But despite all that good news, the stock still dropped around 5% after their investor call. So what's with the anxiety? Well, it all came down to a lack of clarity. Investors were worried about a kind of vague timeline for getting through that huge backlog of orders. Plus, there was no clear revenue forecast for 2026, and on top of that, there are growing concerns about rising costs and pressure on margins. So the big takeaway here is that investors want a clear path to profitability, not just big, flashy numbers. But while some investors are getting a little nervous, others are doubling down. In a major vote of confidence for the whole space, Disney announced a $1 billion investment in OpenAI, which signals a very deep belief in the future of generative AI. This brings us to the macro forces that are at play. Everything from central bank policies to some simmering global tensions. A huge driver of the market's optimism has been the shifting expectations around the Federal Reserve's next moves, and that raises a key question. And the answer is 2. That's right, following the Fed's latest commentary, the market is now pricing in about 2 interest rate cuts for next year. This expectation of looser monetary policy is a major reason why stocks have been rallying so hard. Meanwhile, over in China, a key policy meeting just finished up, but there were no signs of any major new stimulus. Their top priority is still boosting domestic consumption. What's really telling, though, is that resolving the massive risks in the property sector was listed all the way down at number 8, which suggests it's not their most urgent concern right now. And beyond just economics, several geopolitical situations are definitely commanding attention. Tensions around Venezuela are escalating, with the US reimposing some sanctions. At the same time, there are signs of movement on the Ukraine front, with President Trump signaling a willingness to contribute to a security agreement and a key meeting scheduled for Saturday. So, how does all of this set us up for the week ahead? Let's take a look at what's next on the horizon. Based on the economic calendar over at investing.com, a couple of major central bank decisions are on deck that could really set the tone. First, the Bank of Japan meets next week, and markets are pricing in a high probability of a rate hike. Then, over in Europe, a recent survey suggests the ECB might not be done hiking either, which creates a really fascinating divergence in global monetary policy. This leaves us with the key question for the week ahead. Are we witnessing a healthy rotation that can sustain this rally, or are the jitters in the AI sector a warning sign of more volatility to come? It's definitely something we'll be watching very closely. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in the summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.